trial balance. Now, here is the problem. We have a problem here. On 1st January 2020, Best started a business with 2 million. He deposited shillings 1 million. The following transaction took place. 1. 20th January, purchased goods worth 700,000. January 2nd, sold goods to Smith 600,000. January 3rd, received cash from Smith 580,000. January 5th, purchased goods from David 5,000. January 11th, paid by check in full settlement for good 680,000. January 17th, sold goods to Smith. January 19th, paid sundry expenses 10,000. January 25th, paid salary by check 15,000. January 29th, withdrew for private use 5,000. January 30th, paid David by cash 3,000. January 31st, withdrew for business use 15,000. You are required to prepare the following. 1. Journalize the account. 2. Post the above transaction. And then finally, extract a trial balance as at 31st January 2020. So we'll do the solution. What is the solution for this question? To handle this question, keep in mind the following. 1. Every transaction you read, you will ask yourself the following. 1. Which type of account are involved in the transaction? At least in each and every transaction, you will have 2 or 3 accounts. Number 2, which one to be debited and which one to be credited. Then number 3, record the transaction in the journal entry. Then finally, give the narration. Solution. Area of focus as we journalize the transaction. What is our key interest? As we do the journalization, number 1, analysis. You analyze the transaction by establishing the accounts involved. After doing your analysis, give the rule. The rule will help us to know when to debit and when to credit. Apply the rule of debit and credit by knowing which account to debit and which account to credit. Now, what will help us here is by establishing which account is increasing and which account is decreasing. That brings into our mind the rule of debit and credit. Number 3, evaluate. You determine which amount to debit and which amount to credit on the basis of the rule. Meaning that in our evaluation, we are giving the amount. We are determining the amount for each and every account. You debit based on the amount, you credit based on the amount. And finally, account. Give an account of what has happened. In other words, we are giving a statement, what has happened. We are giving a narration of what has happened in a particular transaction. So in summary form, area is our tool of understanding how to record a transaction in a journal. That brings us to use of area as a tool of analysis. Now we start with the first transaction. On 1st January 2020, Best started business with shillings 2 million. Here, the first thing to do is analyze. When we do our analysis, there are 2 accounts which are involved in this transaction. 1 is cash account, 2 is capital account. Number 2, rule. Which rule? In the rule, we need to establish which item is increasing and which item is decreasing, or both of the items are increasing. So in our case, cash is increasing, capital is increasing. Now applying the rule of debit and credit, cash is an asset, capital is a liability. So cash is increasing, so we debit. Capital is decreasing, so we credit, using the rule of debit and credit. Number 2, evaluation. In our evaluation, we debit cash with 2 million and we credit capital with 2 million. And finally, we give an account. Cash to start a business. So the amount of 2 million was the amount of capital which was used to start a business. Number 2, transaction. He deposited shillings 1 million, still on 1st January 2020. In this account, number 1, our analysis gives us there are 2 accounts. 1 is cash account, 2 is bank account. The number 2 is rule. Which one are we debiting and which one are we crediting? From the rule of debit and credit, we debit bank account, we credit cash account, because the amount of bank is increasing and the amount of cash is decreasing. And the rule of debit and credit says, debit what comes in, credit what goes out. Number 3, we debit bank account with 1 million and we credit cash account with 1 million.